Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, March the 30th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Sorry I missed out a couple of days. Actually went to Chicago and brought my computer with me, my laptop, and it crashed on me. So I guess it's time for me to get a new laptop. So I wasn't able to really do a whole lot. Don't like to really trade from my phone. So I also wanted to be able to talk about it with you guys when I'm participating in those things. But quite a lot going on. It looked like Monday the market was kind of falling out of bed and then had a big run back. Today we are seeing new all-time highs in the NASDAQ. So anyway, moving on with the overall market. Yesterday we saw crude oil inventories come in a little bit lower than expected. 0.9 million barrel build. It was expected to be a 1.2 million barrel build. So crude oil has been moving higher for that. Crude oil, as we're speaking right now, up about almost $1.83, right around in there. But then today we got some economic data here in the United States. We got final GDP numbers coming in higher than expected at 2.1%, but it was expected to be 2%, so not a whole lot of increase there. Then we also got unemployment claims coming in slightly higher than expected at 258,000 job unemployment claims, and then people looking for work. Basically, as the economy starts to turn around, I think we're really starting to see a lot of these people come off of the sidelines and start looking for jobs. And then GDP prices came in line with expectations at 2.1%. So natural gas storage came in as a drawdown of 43 billion cubic feet, was expected to be a drawdown of 37 billion cubic feet. So that's probably due to the cold weather that we saw come through the Midwest the last month or so. So they got that blizzard. Still been pretty cold, especially like while I was in Chicago. It was pretty cold, albeit I was by the lake, and that always has a tendency to stay cooler a little bit longer. So maybe it just felt a little bit cooler. We also had Fed Governor, FOMC member Kaplan speaking this morning, and then we have Dudley speaking a little bit later on today. Anyway, on to the overall markets. Like I said, we've got crude oil up about 82 cents right now, right up at this Fibonacci level. This Fibonacci 38 acted as quite a support, a little bit more of a support than what I actually was looking at. But one thing to note, we did see the time and volume nodes kind of move. The time and volume, at least the time spent, is right here at around this 38, 39 area. I thought we were going to break below that and kind of move down into this 45, not on the docket for the foreseeable future, but we're going to have to see how this 23 Fibonacci level will act as a resistance, should act as a resistance today and going forward. We might see a pop above there, but definitely going to act as a resistance for the bulls. All right, and then gold futures kind of trending sideways, but above that 200-day moving average still, and even above the 9-day moving average. So I think we're going to start to see this kind of wane a little bit and maybe start to come off if the equities continue to rally here. Then we got the bonds. They're off today by about 21 points, shy of a full point by about 10 ticks. The bonds are going to feel very comfortable right here, pricing in the continued increase in interest rates by a quarter basis points by the Fed. It's not, the economic data isn't robust enough to really prompt the FOMC to start jacking up rates anytime soon. I think jacking them up by 50 basis points or more. I think it's going to be an incremental 25 basis point move, at least for the rest of 2017. Then the Dow Jones Industrial Average, piercing above that 9-day moving average. Got to settle above there really for those bulls to start really taking control. It's been below there for quite some time. As you can see, Monday, we kind of had that sell-off below that 50-day moving average, and then popped back, settled above that, and then the bulls came out in force on Tuesday. Wednesday was kind of a breather, and today we're pushing again higher. Same kind of situation with the NASDAQ. NASDAQ on Monday really was slamming down, came down, found support right here at the bottom of that volume node, which will have a tendency to kind of get the bulls out. If it were to break much more, we were really going to see that correction that I was looking for, but the bulls came out in force, and we created a new all-time intraday historical high today. Then with the E-mini S&P, similar situation again on Monday, had that big drop, was really looking like we were going to plow right through this little low area, lull in the volume node, come down into this area. That's what I was hoping for. It just didn't come to fruition, and we're starting to push back. But we are still seeing in the E-mini S&Ps, NASDAQ's not necessarily the case, but the E-mini S&P and the Dow consistent lower highs and lower lows as long as we stay below this area. So that is more of a trend to the downside, or maybe the start of a trend to the downside. This is the breakdown of the 15-minute chart, it's a 30-minute chart of the E-mini S&Ps. We are starting to see a little bit of pullback right now. For the most part, off the open, markets just started rallying. Now we're starting to maybe see a little bit of profit taking going on in the E-mini S&Ps. Onto some things that I've done. Macy's, it looks like it's kind of found a bottom, getting back up into the value area, kind of breaking above that value area low. So I decided to take a shot with this. Still has some pretty decent high implied volatility in it. So I decided to sell some puts in there. And it's kind of going to be in correlation to this webinar that I'm going to be doing tomorrow, which is going to be laddered puts in correlated products, continuing with that correlated product hedging type strategy that I kind of talked about on last Friday's video. This Friday video going to be a little bit of different strategy, but still having that same mindset where we're going to be doing correlated products. So I decided to put that in there. Went into the shorter duration because I don't want to start messing around with the earnings. And speaking of earnings, the next series we're going to be doing here after we get done with these pairs trades is going to be talking about setting up and doing earnings trades, because we're out of that past earnings season. We're going to be starting to gear up for the new earnings season. So I want to get ahead of that with you guys so that you guys can take advantage of these earnings trades that I talk so much about in these daily market commentaries. XRT, I've got this on a comparison line, but as you can see here, it is starting to push higher as the retail sector is pushing higher as well. Don't look at the XLK. This is a mistake in a sense, but if I can pull up a different chart, let's just pull up a Macy's chart and put in XRT for the retail ETF. And again, we're seeing it yesterday push above this value area low. So it looks like the retail sector is starting to come back a little bit. So I went into this as a strangle, just decided to put on a trade around that with XRT. And in that, or actually I took off the trade. I was looking at doing a strangle in that, but I think I'm going to save this one for the webinar tomorrow to maybe try and set up a pairs trade on it. So with XRT, I actually covered a trade that I had on, and I was short some puts in the April, short the 40 puts. I sold them originally for 34 cents, bought them back today for 13 cents. So covered that trade for a profit. So that's about all I got for you guys today. Macy's, with that trade, I don't know if I went over that. I did the April 28.5 puts, sold those for 50 cents. So because it kind of had bottom out there, looking for it to push higher. Might start to look at that with the laddered puts, but I needed to get some trades on with high implied volatility, and I don't want it to have that volatility really come out of that with this rally coming, so I needed to take advantage of that right away. So, but I might implement some other puts in that strategy and with some XRT for tomorrow's webinar. So stay tuned for that. Go to protraderstrategies.com, see how we set that up, increase your probabilities of success. All right? If you can't take that, take it easy.